Hey, what's going on, guys? This is Alex Cook. So I have a new video, and what I want to talk about in this are the risks in stablecoins. So we've seen stablecoins like Tether or some others like USD coin, and now have attracted a fairly substantial amount of assets. There are some risks to them that I think need to be talked about. So what a stablecoin is it is meant to be pegged 1-for-1 to the US dollar. So one stablecoin equals $1. It's supposed to track that price. Real world, it trades plus or minus maybe a mil, meaning less than a cent, one thousandth of a dollar. But point being is it's supposed to more or less track it with some variation. Now, so how these coins say they do it is they have advertised themselves as holding dollars in order to back their stable coins, meaning that when one of these stable coins is issued, the company will acquire a dollar to have in reserve to make sure that it is backed, so that if there is a sudden withdrawal, that they're able to facilitate that. Here's my concern: is this actually happening? All right, I'm going to be blunt about it. Like, is this actually happening? So we've seen now from some investigations into Tether that some of their holdings were actually backed by a Bitcoin. So this is now publicly disclosed. You can look it up. Do an internet search on this. This has now been publicly disseminated. The market has seemed to shrug that off. Tether still has a fairly substantial amount of assets, and long run, I do like the idea of crypto. But we got to ask now, how stable are these stable coins really going to be if we see a sudden big withdrawal from them, or if we see the crypto market get a lot more volatile? So there is potentially a lot of turmoil in in markets in general going ahead. So we've seen the yield curve inverted. We're seeing a lot of pretty unsettling stories coming out of major investment banks like Deutsche Bank. So I think it's worth asking what could happen to these stablecoins. So a big precedent that I want to look back at is the Reserve Primary Fund back in 2008. So this is a money market fund. So money market funds, one share of it is supposed to equal $1. And as it is under US law, they can allow their share price to be set to $1. So it's not going to float. I personally am against this. I think that it should float. I think it would give investors a bit more transparency. And the fund companies are going to push back and they're going to say this is going to confuse investors. My counter argument is, well, you need to educate them. Like, do your actual job and educate them. So the reason why I bring this up, the Reserve Primary Fund, and why these money market funds should float, is the Reserve Primary Fund did what's called breaking the buck. So it was backed by assets that were more risky than obviously was expected. So it caused the value of these shares to drop from $1 to 97 cents, which is never, ever, ever supposed to happen. It is never supposed to happen. What it means is that there was a big enough drop in those assets that people had money in that, which they considered to be a cash alternative, basically the equivalent of just having USD cash in an FDIC insured bank account. That lost value, which is something that is never, ever supposed to happen. So even though you think, well, 3 cents on the dollar, that's not a huge loss when compared to something like stocks, for these people, this was meant to be basically just a cash investment or cash alternative. So that was a big shock to the system. My question is, could we see something like this happen with stablecoins? So Reserve Primary Fund, it was invested in some of it was mortgage-backed securities. So 2008, obviously we saw a lot of volatility with that. But with these stablecoins, if they're backed by crypto, like I don't even need to tell you the kind of volatility that's in the crypto market. You already know this. You already know how volatile this can be. This to me raises a lot of questions and potentially some red flags. So me personally, I don't hold any stablecoins. If I did, it would be maybe just as a short-term trade if I was maybe rotating to a temporary cash position from trading. But that all being said, when I invest in crypto, it's as a long-term investment, so I haven't personally needed it. Just if you are a short-term trader, it might be a short-term way to park assets. But with things now like Coinbase having so many more, US dollar direct trading pairs, you may not need that. Like, why get a USD alternative in the form of a stablecoin when you can just have actual US dollars? So I'm not going to be one of the ones who says that Tether is necessarily a scam, because that's a pretty harsh term. I don't know what's really going on in their operations, so I'm not willing to really say at this point if what they're doing is ethical or not. But there are questions that I think need to be raised, enough to the point that there's some red flags out there. So keep in mind, stablecoins, yeah, they're supposed to be backed one for one by dollars, but we've seen now that they're not. So if there is a big run on it, I think that could be a risk that needs to be that investors need to be cognizant of. So if you enjoyed this video, hit subscribe. I'm going to keep coming out with more content. I got the idea from a comment actually in the last video when someone was asking me what I think about stablecoins. So I do like hearing from you guys. So let me know what you think, and thanks for watching.